Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, July the 30th, the year 2018. Let's talk trading. How to make money trading. Um, I got a reply. I think it was yesterday or the day before. I saw this reply to one of my latest videos, and they asked, "Do I have any videos that show you how to make money trading?" Now, I don't know if they were trying to be funny or if they were being serious, but so let's talk about making money trading. It's a simple process, but that doesn't mean it's easy. So the first thing about making money trading is you got to minimize how much money you lose. And you do that by employing your risk management. So let's say you have a $1,000 account and you don't want to lose more than 2% per trade. So that would be $20. 2% of your 1,000 would be $20. So now you've got $20. So if you play for $1 a pip, then you have to put your stop loss at 20 pips. It's that simple. And if you don't do that, then you're probably going to blow your account. So that's the first step in how to make money trading. And I bring this screen up, I think, each video, unless I'm just talking about an indicator or something. But as far as these trading videos, daily videos, you're going to see this screen. So there's your step one. Now step two, you look at a chart. It could be a monthly chart, a minute chart, doesn't matter. But the reason it doesn't matter is because price is the same on all charts. So right now we've got 110.98, doesn't matter what time frame you look at, price is going to be 110.98. The daily high will be the daily high, and the daily low will be the daily low, and the monthly high will be the monthly high. It doesn't matter the time frame. Those levels only change in the current time frame, or the current time, where if you make a new high for the day, it's across the board, all time frames. So if we're talking about daily highs, that time frame, well, if you're looking at a 1 minute chart and the price pushes up to a new daily high, that's what it is. So you look at a chart, if you start with the monthly, you kind of got an idea of the big picture. You see, well, there was a high over there and a low here, and we're kind of somewhere in the middle, right? So then maybe you drill down to the weekly. You can say, hey, look, there was a high, and we've dropped down almost back to here. So how does that help us make money trading? Well, you have to realize price moves. And we can sit here and we can watch the price oscillate. I think we have a 97, then we'll have a 98, maybe we'll have a 111, maybe we'll have a 110.95. We'll just sit here for the next 10 minutes or so and watch the price oscillate. So now that we know how much we're willing to risk per trade, let's not say bet, but risk, is now we have to decide what pair to trade. I trade dollar yen mainly because I find it to be very predictable, it's like the price moves in a predictable fashion. It moves very deliberately. And at first I used to hate the dollar yen because of that. Well, it was the same thing when I used to trade stocks. I used to hate the way Apple moved, but then it was like, well, but wait a minute. I'm recognizing something, and if I can recognize something, I can exploit it. So you see here, now we're down to 110.96. So if we pick this pair, now we've got our risk set at $20 a trade. Now we've picked a pair. Now what's left to pick? Only one thing, a direction. Do we want to buy, trade long, or do we want to sell, trade short? Well, price moves relative to different points. The daily open, the weekly open, monthly open, the yearly open for that matter. The hourly open, the 4-hour open, it depends on what you look at. And that's why I set up these different multimeters. In this one, we can see we've had 2 green months in a row. And right now, the price is above the monthly open. That's why it's green. Price is above the weekly open. We can see that. Price is above the daily. But 4-hour chart, we've had 3 reds in a row. So which way are we going to trade? How are we going to pick the direction? That's the trick. So if we look at the daily chart, we can see no ranges over 100. It's a slow day so far. Nothing really happening, right? And you can see here that the yen is in that wick zone. And we'll see it a little bit more on the next chart. So let's move on. And so we've got the buy zone. What's the buy zone? Well, it's the distance from the daily open where if price moves this amount, chances are it's going to move further. So in this case, price moved up to the buy zone, which is the open +8 and the open +10, and then it moved up further. And in fact, we have a 111.02 last call there for that, and it actually hit 111.159. So that trade was worth close to 13 pips if you jumped out right at the high. So let's just say you could have made 10 pips off that trade. That's not bad. Pretty simple. So we're trading away from that daily open. So it's not a breakout. It's just we pick a direction, especially at the beginning of the day, price is going to move away from the daily open. Now, at some point during the day, it's going to make a high, daily high, and it's going to make a daily low. That would be for the entire day. But we don't know when that is because right here, we had a daily high, a new daily high, a new daily high, and another new daily high. And here we had a daily low. And those are the figures right there, the high and the low. So can we do anything with that? Well, we can. We can go to the rat zone because we know statistically price is going to come back off of the daily high and it's going to advance, come off that daily low. And that's how we exploit that. So we can either trade away from the daily open or we can pick to trade away from the daily high or the daily low back towards the open. So when you look at it that way, you're either trading towards the open or away from it. Then you can switch gears. I mean, in the beginning here, beginning of the session, you can start trading away from the open because price is going to range. Okay, and then at some point in the day, if you come in later, you can look at those daily highs and lows and you can decide whether or not it could be profitable to trade away from it. So in this case, we've only got a 27 pip range. We're not really going to make that much trading away from the daily low and the daily high. It's just that we just don't have the range. And other days we might have 70 to 100 pip or more ranges, and yeah, we can exploit that. And as I said before, we had 3 red H4s in a row. Which way do we trade? You can see here price came back to the open and then moved away. So you can either always trade away from the open, or you can always trade the reversals off the daily, weekly, monthly high lows, or you could do a combination of both. Now, the thing is about the rat zone is that rather than guess, it's better to pick one direction. Be a green rat or a red rat. Because sooner or later, if you're a green rat or a red rat, you're going to be right. And sooner or later, you're going to be right big time. But if you're a green rat when you should have been a red, and a red when you should have been a green, then you're just going to wind up giving your money away. But if you're always green, then sooner or later things are going to play out in your favor, and you just have to recognize when it's your turn. And when it's your turn is when price is in that green rat zone. Or if you're a red rat, price is in the red rat zone. And in these days, some days there's just no cheese to be had. And once again, which direction to trade? Sometimes you like to trade toward the pivot, from the open price toward the pivot. And as you can see here, so far this year, we've only had 5 misses. And sometimes it might take a few days, but then price comes out and covers that. So you might want to trade toward that pivot, away from the open toward the pivot. Or if you like those reversal type trades, you can use a 3-level ZZ semaphore indicator right here. And this is the one I modified extensively. It puts up all kind of lines on there if you're so inclined to look at those. But, 2 ball at the top, red at the line, you go short. 1 ball at the bottom, green at the line, you go long. See here, there wasn't much to be had, but even if you stayed in right here, you got a 1 ball at the top, it crossed below this one, so this trade could have been profitable. Hairy hindsight, right? 1 ball, red at the line, you go short. Once again, could be profitable because you see here it made a new low, reversed, especially off the 2 ball. That's where you take that short profit. And you can see here, 1 ball came, the candle green at the line, you go long. Notice something here. You see that 1 ball, it got pushed, should have scratched that trade. If it doesn't push through that double O and at least hit 5, struggles, just exit. And you probably would have a clue if you were using the spread dots. Once again, if you don't know which way to trade, you can use the H1 candles and just go with the H1 candle color at the line like we showed there. Wick zones, we know price doesn't like staying in the wick zone. So price is in the wick zone. When it exits, you take the trade. Once again, we're going to risk $20 per trade. And so you have a 20, if you trade it at $1 a pip, you've got 20 pips. So 110.99, 110.79. See, there's 20 pips. If you went long here, you had some drawdown, but then you had an opportunity to exit. So that's another way to trade to make money. And you can see here the holo, highest open, lowest open. Once again, you can go short here at the highest open. You can go long at the lowest open. And as you can see, you can make money doing that. Because that is the name of the game, making money trading. Here, we're just looking at the tick chart. Hasn't been much movement over there. Inventory reduction bars, it's real simple. You go short at the red line, you go long at the green line, and you put your stop loss in. Daily, weekly, monthly, open, high, low for the current and the previous. Actually, you should probably just put the previous on there because that's where we're taking the trades, and except for the open. And you can see here what happens. Just remember, though, you want to make money trading, It's not what you trade, it's how you trade it. So get out there and drain